And we're seeing it with crypto. Celsius halted withdrawals. Why are you holding withdrawals for? Lending firm? Interesting. Can I see a balance sheet? No. We saw what happened to Luna. I mean, you have these companies, and I try to figure out the model, and you can't because you just can't figure out the model. Like, how are these companies able to yield farm, pay 10% plus in yields, sometimes pay 15, 20% in yields? How are they able to do this? Because now you're seeing massive withdrawals, and you can't see the balance sheet, right? I mean, in crypto, you can't see those. You have all this yield farming, and that's a strategy where users, can't call them investors. You got to call them users. Not investors in crypto. No. With the users in crypto, okay, they lend their crypto or borrow crypto to earn cryptocurrency in return for their services. And they do that, and they earn high yields. So this yield, it's in the double digits many times. As you know, that's not sustainable. It's not. It's sustainable if you're able to make a higher return on that to pay it. But no one's making returns on anything right now. So obviously, this whole market of deleveraging is going to blow up. All the lenders, all this shit's coming out. And you can't look at the balance sheet to say, hey, are these companies generating cash flow that can still afford this? Nope. I don't know. You can't look at them. And we avoided a lot of yield farming through the years and stuff. For me, looking at yields and you can't understand where it's coming from. I mean, offering 5 times treasury, much higher yields in junk bonds, which are at least, backed by some sort of collateral cash flow, and you could, liquid and trade them if you see a company's not doing well. I mean, junk bonds it sounds, it's the greatest term ever, junk bonds, but, you're able to see the fundamentals and everything. The person lending the money, obviously that interest rate's going to go higher, but it's backed by some sort of collateral cash flows where you could see it. It's tangible. I see crypto, you can't see it. So now you're seeing this massive outflows where even Celsius, I mean, you're seeing, a lot of these things do have Bitcoin on their balance sheet. And now they're like, holy shit, we need to sell Bitcoin. And Bitcoin's, coming down. And I told you about the institutional money that's going to be pouring into this, where they're finally opening it up to retirees, Fidelity. There are people that want crypto. Could Bitcoin go to 17,000, 15,000? Absolutely, it could. But I can tell you, it's going to go a lot higher long term, and it's hard to see that with some of these things. Not all crypto. Again, 90% of this shit is garbage. Very upfront on that. The names of our portfolio, good names. They're getting hit just like everybody else, and they're getting nailed. So when I look at this, you say, for all terrible news, it's horrible news. But the positives, you need to wash out in crypto. It's similar to what we saw in the dot-com crash. And many of these companies went bankrupt over the next 2-3 years. Netflix was almost bankrupt. They went to Blockbuster, and Blockbuster laughed at them. Reed Hastings came out and said, all right, we're going to destroy this company. And they destroyed Blockbuster and destroyed everybody and became one of the greatest companies on earth in streaming. Again, people are going to say, well, it's down 70%. Yeah, this year, over the last 12 months. But holy shit. But they survived, and look what happened. Apple survived, which traded, I think, under $2 split adjustment. I think even under $1 maybe. In March 2000, Adobe, Intuit, ARM Holdings, Intel, Microsoft, Amazon, the survivors. There's a reason why these companies have tens of millions, if not hundreds of millions, in Apple and Google and whatever, and short-term notes and everything. Their balance sheets are stronger than they've ever been because they've been through that time. So you see a whole washout of really good companies back then. They just didn't know how to manage themselves, good ideas, and these guys, look what happened to them. That's what's going to happen in crypto. I mean, you're looking at the stock market itself. I mean, names, tons of names, down 50% plus from their highs. I talked earlier about great balance sheets, trading single-digit forward PEs with their numbers lowered significantly now. Numbers are coming down. Names generate tons of free cash flow. Insiders are buying aggressively, paying over 2% yields. Okay, there's a lot of names you could look at and say, holy shit, these are really cool names. Isn't the reason why IBM is holding up well? The cash flows that it's generating, and it's a dirt cheap stock. That's the new norm. But you look at crypto, this is where the innovation's coming from. So we need to wash out all the shit, which is something I'm happy about. But the innovation includes DeFi, security tokens, which we're seeing with us. A lot of people, now it makes even more sense because a lot of these private companies that raise so many rounds in funding, their valuations are down significantly, but their step is to go IPO. Now your money's locked up in these guys. Wasn't so bad because, as you're doing these capital raises, some of the insiders could get out as you're raising more money at a higher price in the private markets. That's how you determine the valuation. The valuations are all down tremendously with these private companies, but now you're stuck in this name and there's no trading vehicle. Well, security tokens provide that. Provide it for us. That's why when we say, hey, we do deals with TCG and we offer stock, our stock is tradable. Do we have a lot of volume on it? No, not yet, but it's tradable. It's a tradable security. That's a big difference. And we know that a lot of this is going to go into security tokens. That's why Coinbase has its license. That's why Gemini has their licenses. They see it because these things are going to be deemed securities eventually. They should. The securities. Don't you think the securities right now? They're paying you tons of yield and you're losing money on them with expectations that you're going to make money. It's the perfect, exact definition of a security. It's whether the SEC wants to enforce it or not, which you should enforce it because you would have saw a washout a lot sooner instead of doing it after, which is coming in the future. And then, it's going to create even more downsides. A lot of these companies leave, but now the cream's going to rise to the top, the great companies. And this is why you're seeing so much money being raised for Web3 in a market that's terrible. That's horrible. Andreessen Horowitz was in $4.5 billion with their eyes closed like 3 weeks ago. Look at a DAO, which is governance tokens, where you have a board of directors who works for themselves and everything happens and it's great for them and control most of the voting power most of the time, even through the funds that they know and stuff. So now it's governance, where it's the majority of people who are invested can vote on this stuff. Look at Andreessen Horowitz and type in DAO, D-A-O. Those guys are the smartest guys in the room. Read the paper that they wrote about this and how it's a game changer. It's a game changer in terms of structuring corporations. That's what you want. Isn't it nicer? You think you have voting power. You don't have voting power. The fund who you invest in has voting power. Otherwise, these ESG projects wouldn't pass through with a lot of these guys. You wouldn't have, the climate change guys sit on Exxon forcing them not to drill in a market where we need more drilling. You don't have voting power. You think you do, but you don't. Insiders creating, certain class of shares. This way, they have more voting power and stuff. I mean, seriously. Votes matter, and you see it on TV. The voting matters when you have these massive, massive companies that have been around for 30 years where the insiders, most of them sold out, and they're $20 billion, $50 billion, $100 billion valuations. And not like Elon Musk that owns a massive percent of his stock. A lot of these guys, there's not large insider holdings. So then you could see the votes, especially if some of the funds that own all this stuff, that's where the votes come in. But most stocks outside the S&P 500, even if you go to like the bottom 200 or the Russell 3000, you really don't have any voting power. You think you do. Everybody wants it. It's like equity. Everybody wants equity in a company, but most people don't know what equity is. I can tell you straight up, most people don't know what equity is. Oh, I got equity stake in the company. And it's shadow equity, meaning if you leave, you get nothing. They don't know the difference. NFTs, which Bill Gates shit on. And then listening to him, I realized he has no clue what an NFT is. He's like, oh, these art projects and shit. Yeah, a lot of that's garbage. A lot of it, most of it. But NFTs validates. It validates this stuff on the blockchain where it's yours, it's ownership. It's more than just paintings. And I told you, I give it tickets where again, these billionaire owners are going to create NFTs around their tickets. This way you don't have to sell them to Ticketmaster, StubHub for $100. Now you have NFTs tracking this, so every time they resell that ticket, you get a royalty. You want special access through an NFT.